Welcome to the Accounting Desk, your channel for learning accounting in a simple and practical way. In this video, we'll explain the rules of debit and credit using the 5 main account categories: assets, liabilities, equity, income, and expenses. This modern approach is easier and more practical, especially for beginners. Let's start with assets. Assets are resources owned by the business, such as cash, equipment, or inventory. The rule is: debit increases in assets, credit decreases in assets. For example, when the business receives cash, cash is debited. When cash is paid out, cash is credited. Next are liabilities. These are obligations the business owes to others, such as loans or accounts payable. The rule is: credit increases in liabilities, debit decreases in liabilities. For example, when the business takes a loan from the bank, liabilities increase and are credited. When the business repays part of that loan, liabilities decrease and are debited. Now let's talk about equity. Equity represents the owner's claim on the business and includes capital and retained earnings. The rule is: credit increases in equity, debit decreases in equity. When the owner invests money, equity increases and is credited. When the owner withdraws money or the business incurs a loss, equity decreases and is debited. Next is income. Income includes revenue earned by the business, such as sales or service income. The rule is: credit increases in income, debit decreases in income. So, when the business makes a sale, income is credited because revenue increases. Finally, we have expenses. These are costs incurred to run the business, like salaries, rent, and utilities. The rule is: debit increases in expenses, credit decreases in expenses. When the business pays rent or salaries, those expense accounts are debited because expenses are increasing. To summarize the rules: assets, debit increase, credit decrease; liabilities, credit increase, debit decrease; equity, credit increase, debit decrease; income, credit increase, debit decrease; expenses, debit increase, credit decrease. These rules ensure that every transaction affects at least 2 accounts and that the accounting equation stays balanced. Once you understand these 5 categories, recording any accounting transaction becomes much easier and clearer. If you found this explanation helpful, don't forget to like, share, and subscribe to the Accounting Desk for more simple and practical accounting lessons. Thanks for watching, and see you in the next class.